Is California's housing market slowing down? I'm going to go over that question. Also going over rates. I know after a big week so far at the CPI and the Fed raising rates, where are rates at? Those are the hot topics today on Real Estate Daily. Welcome everyone. My name is Troy, and this great day of the 15th of December, a Thursday, I'm going to go over the latest news in housing, real estate, and the mortgage markets. But before we jump into it, do me a favor. It really helps my channel out. Hit that subscribe button. Boom, boom, boom. I'm going to give you the best 5 to 10 minutes in real estate on a daily basis. Tips, tricks, you name it, you're going to get it. And let's jump right into it. All right. This is today's Orange County Register, kind of a local paper here. It says Fed easing rate hikes may be good news for the housing market. So after the Fed had talked yesterday, and I went over this, they said that going into the future, they were going to continue to raise rates, but at a much slower pace. In fact, they talked about topping out right around 4.5 to about 5.25. In fact, there was a survey of those Fed chairmen, and they said right around 5.25, 5.5, most of them. So if we're right at the 4.25, 4.5 right now, we're not talking a ton of rates, rate hikes going into 2023, though Fed Chairman Powell said they won't be lowering rates until 2024. But let's go do a deeper dive in what he said there. If I were to look at February 1st, which is the next time that rates, they will meet, and they will then tell you what they feel the future is going to be in the rate hikes, I think they're going to go 25 basis points on February 1st. After that, there might be another 25 basis points here and maybe another one there, but I think they're going to go flat, and they're going to sit back and wait and watch what happens. Now, the key factor here is unemployment. If we continue to be fully employed or unemployment's under 5%, guys, it doesn't make any sense. The only way is if everyone stops buying things, and that would be the only way that the Fed would then see a pivot if unemployment was to stay under 5. But in reality, they want to see 6% unemployment rate, and that's what their part of their goal is. I don't agree. Obviously, making people unemployed isn't the American way. Obviously, it's the Fed way, but it's not the American way. That's what's happening right now. It actually could be really good if they're easing now. Again, they don't control interest rates for credit card companies or for interest rates for mortgages. It's the mortgage companies, and the feeling is with the mortgage companies. What are they going to do? And then later in this video, I'm going to go over the rates, what happened yesterday after the Fed meeting. So next article. In fact, before we jump into the next article, do me a favor, hit that like button. Helps me out tremendously here. These are our numbers going off of what's happening here in Southern California. MEQ it up. All right. So let's go over the actives first. Actives. So actives here, these are the 4 weeks. This is 4-week period of time, of which in the 4 counties, and this is off the MLS, it shows that the top line there is Los Angeles, is San Bernardino, Riverside, and Orange counties. We're seeing that as it steadily goes down, inventory keeps dropping. These are actives on a weekly basis. If you're looking here, let's call it in Orange County. Orange County only had 197 actives last week. That is down. The week we see the big dip is your Thanksgiving week. Everything else is on a 4-week rolling average. It's down, and it's down significantly, down 20, 30%. So until we see that number go up, this is going to be a buyer's market. We have to see inventory go up because we know one thing, everyone, that we're seeing that the interest rate's going down, and it's causing more buyers in the market. All right, so let's go take the median home price. You're going to ask me, hey, Troy, what is the median home price in our market? So if you live in Orange County, your median home price is $900,000. Well, guess what happened a month ago in November, the middle of November, it was $915,000. We're not seeing that big of a jump. Now let's go take a look at the median home price in Los Angeles County, $825,000 to $800,000. Well, we're talking a 3% dip between those two, between that 30-day period of time. a lot of them are they're right around the 2 or 3 up or down. We're looking at San Bernardino County, actually went from 460 to 475. It's a little more affordable there. So that's what you're seeing in that county. But we're not seeing these big numbers out there that are showing houses are sitting on the market. There's no actives. The housing market's falling apart. The number one indicator that houses sit on the market is when people lower their price. Now, I get that when you're sitting there going, oh, well, and I see that, and it happened last night. Let me take a step back. Last night, I talked to a client, and they said, hey, Troy, we, in our feed, in our MLS auto search, we keep seeing the same homes over and over. Can you get rid of those homes? I'm saying the reason why you're seeing the same homes over and over, and those are the ones that you don't want to see, is because they're garbage homes or junk homes in which the seller continues to lower the price because he overpriced the property in the first place. That's what you're seeing. And that's why you keep seeing it in your feed every 30 days, because they're aggressively lowering the price because it shouldn't have been where it was at in the first place. And they're like, oh, wow, that makes complete sense. I said, yes, that's what's happening out there. You're not seeing the median home price in any of these counties just simply drop off the face of the earth, right? They're not. And because of that, we know that the market here in California is strong, and it's rock strong. I know that me and my business partner, Ryan, when we're out there showing homes, we've written offers, we're seeing that a lot of stuff, if it's a little overpriced, the second it comes down even a smidgen, you're getting multiple offers on it. Or if you price it right and it's rehab, it's selling for over asking. That's what's been happening out there. Guys, if you're on the sidelines, I'm telling you, unless we see a big, huge bump in inventory in January, all these people sitting on the sidelines saying, yeah, I'm waiting for January, they're going to be in a bidding war, and that's not going to be good. So keep that in mind if you're sitting on the sidelines and watching this video. Next. Well, what areas are not doing good? 2 areas in the housing market that are not doing good. One is home builders. We know home builders just... They're there for profit. They raised their prices way too fast, and now they're sitting there floundering at way high prices. They keep building. Now they're trying to slow the building down. The other one's the home flipping. So home flipping on a down market is very, very risky. You need to buy the property at the right price, and with the amount of, let's call it, contractors that are out there, and because of the amount of money that's out there, a lot of contractors are just booked forever. Then if you don't have a crew that's loyal to you, that's going to give you good pricing, then it doesn't really make sense right now. If you're looking at home prices slightly bumping down, then you have to adjust whatever you purchase that property for, and then you have to have a crew that's not going to be outrageously expensive. All the people, all the contractors that I know that are out there are charging just stupid money. They tell me, Troy, I can bid 5 to 10 properties a day. He goes, the ones I bid, I just bid 10% more and 10% on top of it, 20%, 30, 40%. He goes, and I'm still going to get, if I bid 10 out, I'm going to get 1, and it's a home run. It's a home run over and over and over. So they've been really doing well. And I'm just saying that the home flipping market is just not very good. CNBC just goes over that as well. And let's get right into the interest rates. We know that the Fed raised 50 basis points. They said that their target rate is going to be right in the early 5s. So that's only 75 to a point basis points, 100 basis points off. And because of that, you just saw a big nothing burger yesterday. Yeah, jumbo rates jumped, but 30-year conforming conventional flat. Look at FHA went up 5 basis points, nothing exciting. We're seeing that the bond market is fluctuating pretty fast right now. We hope there's no inversion between the 10-year and the 2-year. That would be not good. So with that being said, guys, thank you very much for joining me. I will get with you every single day, Monday through Friday, the best and latest news. Today, we talked about, California's housing market slowing. If I were to answer that question truthfully, I think it's slowing, and it's not for the reason you think. It's the reason because inventory is down, and that's really hurting this market. You guys have a fantastic day, and I'll talk to you tomorrow.